I think, as most people know, because they go to the supermarket, and when they, in the COVID example, they printed 40% of the money supply in under 2 years, and that just caused grocery prices to just kind of go through the roof, and everybody's suffering. I think everyone's now aware of the problem. I mean, those of us who were in the sound money community, kind of gold people before Bitcoin, we were always aware of the problem, but there weren't very many of us, and nobody was listening. And now the problem's gotten worse, and so more people are listening.
Yeah, absolutely. I also saw that you also mentioned all the bubbles that had been, right? Like,
the dot-com bubble, and then the housing bubble, and then now I think what we're in is what I call the everything bubble. And these bubbles get formed because the price of money gets set at the wrong level by the Federal Reserve. I mean, after the dot-com bubble burst, the Fed took the rates down to 1% in order to try and stoke a housing bubble. They even said in the monetary system, what you need to do is buy assets that the government can't print. And there are really 2 or 3 that fall into that. I mean, real estate's the 4th one, but the big monetary ones that fall into that bucket are gold, silver, and Bitcoin.
Absolutely. Another thing that I want to ask you, because you mentioned, and I think you focus on the book about this, and is inflation. Why do you think inflation is treated as normal? Because I don't know, why do you think that that lie has been so easy to sell to the public?
Yeah, well, it's just because the Keynesians kind of got control of the economic system, and they've controlled the narrative. And the Keynesian model says growth is the thing we should worry about, when in reality what we should worry about is efficiency. And they measure growth by, the top line gets bigger, and one way to make the top line bigger is to push prices up so you get growth. So they're kind of focusing on the wrong measurement metric, and whenever you measure, what you measure for is what you get. They've even gotten to the point, I mean, the Federal Reserve's original charter said not original charter, but the charter they amended it to in 78 said stable prices and full employment. That was what they call their dual mandate problem. And what he said was kindle animal spirits and get the economy going again. And that, think about it from a government point of view, the governments love that because that gave them the power to tax and spend the money. And if they couldn't tax to do it, they would print the money to do it. And it made governments more powerful. And then, of course, it made Keynes more powerful because he was a high-paid advisor to the government. So that kind of became his economic model. And to give him fair due, he also said, and then when the downturn is over, the government should cut back and run surpluses. Of course, that never happens. They just keep spending, and the surpluses never occur on the downturn, when things are going well. But having said all of that, what he did was he shifted, what was a free market system based on gold, and he hated gold, into a government-controlled monetary system based on, the government rules and fiat currency rules that allowed them to print money as needed and spend money as needed. And so that's the heart and soul of the Keynesian model. The alternative model is the Austrian model, which was originally founded by a guy named Karl Menger. And then he followed through. A lot of guys followed through on his work, von Mises and so forth, Rothbard, etc. Got bailed out, and 1 year later they paid themselves $20 billion in bonuses, right? And meanwhile, the rest of the country, they were losing their houses, losing their jobs, getting hammered everywhere, left and right. So it was really a bad scene. The fact of the matter is that it was driven by relying on this broken Keynesian model. Look, they wrap it in really nice language, Juan. I watch, all of Jerome Powell's press conferences, and he comes out and he says, we're doing this for the American people. And I want to just scream at the TV and say, bullshit. No, you're not. You're doing it for the bankers, and for the government people. You're not. The American people are getting screwed. We're paying more money for groceries, period, because you're printing money. It's that simple. It's really not. This is not some incredibly complex thing. But they make it sound complex, and they wrap it in language that supports what they're doing. All this gold bugs, like we're crazy. Well, the fact of the matter is that between 1789 and 1971, this was a pretty good country. We had our flaws all the way along, and had to deal with them, and slavery and wars and so forth. And that was all on the gold standard. So, and now it's like, oh no, that's all. Gold standard's horrible. Well, in 1946, we stood at the top of the world. And, we didn't have fiat currency. We had a currency that had a link to gold. So, I think, sadly, we're going to have to relearn that lesson, right? We kind of, somewhere along the line, the Keynesians came to win. and we went off the gold standard and we're on fiat currency, and they were like, hey, look, see, it works, and it has worked with, with ups and downs and so on and so forth, but eventually the math of it will eventually force it to not work. And there's I can't find it anymore, but there was a study I recall reading which showed that fiat currencies like what we have now, that the average lifespan of them is kind of 40 or 50 years, and we're like at 52 years or 54, 53 years since we went off the gold standard. It's the problems are getting U.S. government deficits, the U.S. printing of money. You come to realize that trust is misplaced, and the market's giving you signals of that, right? I mean, Bitcoin hit a new all-time high of 106 or 7 late last year, and gold is hitting all-time highs almost every day. To me, those are two very loud signals. They're like alarm bells going off, like, hang on, people are losing trust. The other thing that's going on, it's interesting, is the dollar, even compared to other pieces of fiat currency, because all currencies are fiat, the dollar is going down. So, and the dollar is the world's reserve currency still. That's slipping, but it is. The dollar at the end of the year was 109. Now it's 99. So, in one quarter, a little over one quarter, it's lost 10% of its value or so. Yeah, I mean, I see signs, and you're also getting some signals from the insiders. Like I think I mentioned this on Danny's show, that you're seeing that the Federal Reserve was they were shrinking their balance sheet by what they call quantitative tightening, which is the opposite of time. I'm not saying this happens tomorrow, but it's clearly a trend, and I think I probably said on Danny's show. I mean, I think by the early 2030s, maybe 2030, 2032, we will have transitioned to a different currency system, because this one will have kind of fallen apart. It's certainly going in that direction. So, how it goes along that path, I mean, I don't know. It's going to be bumpy for sure.
Okay. That's another thing that I want to ask you now that you mentioned a little bit the context about the US. What Trump actually wants in this administration. And just let me give a little bit of context for people about what is a tariff, or at least what I think is a tariff. And I think and you will correct me if I'm wrong, it's a specific leverage that can be pulled by a politician that essentially will be a tax on a good, right, that is imported into the country. So let's say for the UX, for example, a lot of things that you buy are manufactured outside the United States. So if you're a politician that you want to encourage from US manufacturing, or you want to encourage to buy from the US, right, supplier. So what they do is to add up certain...
And so they've decided to reverse that. Now, whether they did it in the most graceful way, I can argue they probably didn't, but they decided, as in Trumpian style, he figured, well, if I'm going to do it, I'm going to do it in a big way. And so he kind of went nuts.
Yeah, definitely.
Right, declared war on China and then started escalating everything else. Now, it's interesting to note, of course, they backed off, because when he did it and he ramped it up, the bond market started to fall apart, and the stock market did too. At one point, the stock market was down 20%. And at one market, the yield on the 10-year bond had shot up very dramatically. And so that was when they came in with the 90-day pause on the tariffs. And so now they're reevaluating and negotiating, and who knows, at the end of the day, maybe there will be no tariffs. I don't know. But I think, what Trump wanted to do was he wanted to break the glass and get the conversations started. And he certainly did that. Yeah. Now, like I said, whether that's the right thing or not, it's unclear. What I think is going to happen, though, unfortunately, that as the markets continue to play themselves out this year, you're going to see a situation where he's forced to change and print money. And they're in the title of the book, The Big Print. So I think the big print is coming. And, I'll go a step further. The last couple of prints were big, but increasingly big. Like Bernanke printed $3 trillion over 3 years. Powell printed $5 trillion over 18 months. I think the next one's going to be bigger. So, and ultimately inflationary, which is, again, back to why you want to hold things that the government can't print.
Absolutely. Yeah, because I was thinking that they were trying to do this to devalue the price of the dollar, and suddenly, but that's I don't know if it...
You're absolutely right. There's no doubt they want a lower dollar. Absolutely.
But it's because they want to go to eventually to a monetary reserve, because, Luke Grumman recently suggests that the U.S. may revalue gold upward, right? And use it to settle the debt.
Luke's brilliant, and that's right. And they probably will have to do that. I think, but yes, I mean, and you sell it short. Well, the losses you take are going to be really large. And so, So, and hiding that is going to be harder. So I'm not saying there won't be paper Bitcoin. I think it's a risk. But I think that based on what I've observed, the size of the futures market for Bitcoin, the size of the derivatives market, I mean, there's an enormous futures and derivatives market for gold, enormous. And so they use that to manipulate the price. The size of the futures and derivatives markets for Bitcoin are tiny compared to the total supply. So, as I say, I don't think they've done it yet, but it's a risk. I mean, it's certainly a risk. But I think Bitcoin's going to overtake things so quickly, they're not going to really figure out how to do it.
Okay, awesome. You mentioned also about that because they need to audit the gold. And Elon, a couple of weeks ago, mentioned that he wants us to audit Fort Knox. Do you think it's likely possible?
Yeah, this is a favorite topic. So there's a lot to talk about here. So they get in there and they say, okay, we're going to go to Fort Knox and we're going to audit it. I mean, problems with using gold versus using Bitcoin. You don't know who has what, right? So yeah, it's going to be very interesting to watch. And if Trump and Bessent don't come up with a Fort Knox audit within a year or 2 years' time, I mean, I would imagine other countries would kind of say, why? And they would start to have the same suspicion that I have, that maybe it's not there. And very interestingly, as you probably know and your listeners probably know, China has made a big bet on gold. They have a lot more gold than they say publicly. And the reason we know that is because we can trace the imports that they have from Switzerland into the country. So, and we know China is kind of Bitcoin hostile because they threw all the miners out a few years back. China, I think, all countries around the world can look at the monetary system and they know, hey, this is broken. It's going to reset at some point. And so, China, Russia, others have made a bet on gold, which is the argument for if the United States wants to leapfrog them, we should make a bet on Bitcoin. And Bitcoin is sounder than gold. The stock to flow has misused its position as the world leader. I mean, in 1946, after World War II, the U.S. was clearly just the only leader in the world. I mean, Russia was still there, but we were so far ahead of them.
Yeah.
And we had a position of power and prestige, and our industry hadn't been ruined by the war and so forth. And so, sadly what happened is we misused that position somewhat, and we did things that didn't necessarily, serve our interest in the long run and were bad for other parts of the world. I mean, take, for example, the Middle East. We wasted $8 trillion on wars in the Middle East, and a lot of people died in those wars. And for what? I guess probably to try and secure some oil supply, but, the weapons of mass destruction turned out to be a lie. And, there was just a lot of stuff that we did that was not in our best interest or in the world's best interest. So I think sadly, everything America does has an impact on everybody in the world. And because American policies have not been what I would call enlightened in terms of monetarily, and rather than listening to, Team Blue saying this or Team Red saying that, they're both in favor of fiat money, and that's bad. It's the money that's the problem, not this other stuff. Let's go fix the money because, we all have the Bitcoin phrase, right? I stole it from Marty Bent. If we fix the money, we fix the world. I mean, it's at the core of a lot of the problems, right?
Absolutely. We're gonna start wrap it up probably. If it's okay, I'm gonna ask you 3 more questions because I want to ask you about El Salvador.
For as much time as you need.
Okay, because I would like to ask you about El Salvador. I didn't know that you have been there, but
yeah.
I want to ask you about that. So so if you can share your comments.
My brief reaction. So Big Sean, a good friend and a great guy, threw the halving party down in El Salvador, and he invited me to attend, and I did. Preston Fish and myself and a bunch of others went down to it. And it was fantastic, and I was really impressed by the country, really impressed by the people, how friendly and nice they were. Sadly, I didn't get to Bitcoin Beach. It was where the event was held up.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your